Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we're starting with China's benchmark, and the Shanghai Composite Index closed down 1.28% at 3165.07 on Tuesday. This was in line with the region-wide sluggishness, as of course losses on Wall Street overnight and new manufacturing data out of the mainland curbed risk appetite. China's official manufacturing purchasing managers index, however, edged down with 0.3% below the 50 mark. That, of course, separates expansion from contraction. Hong Kong's Hang Seng index notched down 0.8% to the first trading day on the first trading day of September. For the month of August, the Hang Seng index lost 12%, its fourth straight month of declines. And of course, the worst performance since September 2011. Japan's benchmark Nikkei 225 index slumped 3.8%, more than doubled losses in the afternoon trading session, which, as expected, the weak manufacturing data out of China casted shadows on the health of the world's second largest economy. The yen, however, edged slightly higher on Tuesday as falls in Asian equities kept the focus on whether investors would need to further unwind carry trades, bets in risk assets funded by low-yielding currencies. The dollar, as we mentioned, fell 0.3% to 120.86 yen, having retreated from its recent peak of 121.76 yen, set late last week. Meanwhile, of course, we're looking at the Reserve Bank of Australia's interest rate decision. It kept the rate unchanged at 2% at its monthly meeting, which is in line with expectations, sparking a brief tick up in the Australian dollar to 0.7141 against the greenback. As, of course, of late Tuesday, the currency paired gains to trade at 0.7125. In the European continent, the stock markets opened lower and, of course, quickly accelerated losses on Tuesday as China's economy continued to disappoint investors. The pan-European stock 600 index was 1.9% lower shortly after the open. And of course, we're looking at also the London's FTSE 100 was down 1.5%. Germany's DAX was nearly 2% lower, and the French CAC 40 was off by over 1.7%. But the euro, however, rose 0.5% to 1.1263, extending its recovery from last week's low of 1.1156. Elsewhere in Europe, however, the markets think that Bank of England will raise interest rates only after the Fed will raise rates also. So there is a chance that sterling could fall further against the dollar after we are looking at a slight edge up with 0.3% to 1.5396 from the low of 1.5341. And of course, gold in the commodity sector slightly higher on Tuesday as equities followed on mounting expectations that the U.S. Federal Reserve will likely go ahead with an interest rate increase this month. As we saw on Saturday, Stanley Fischer, Vice Chairman, said that inflation will likely rebound as pressure from the dollar trades, allowing the U.S. interest rate increase, which will be done gradually by the central bank. And of course, the metal edged up 0.5% to 11.39 an ounce in early Asian trade after a sluggish session on Monday. Oil prices fell nearly 3% in Asian trade on Tuesday, with investors covering short positions and, of course, taking profit after the U.S. crude soared more than 8% in the previous session. West Texas Intermediate had climbed 27.5% by the end of the 3 days of gains in the previous session. That was the largest 3-day increase in dollar terms since February 10, 2011, and the biggest percentage increase over 3 days since August 1990. The surge, of course, was fueled by an OPEC commentary saying that the cartel was willing to talk to other producers to achieve reasonable oil prices. as well as by the downward revision of U.S. output data by the U.S. Energy Information Administration. Nothing major in the economic calendar today. Thank you very much for joining us. See you next time.